All right, let's talk about Everus Construction Group. Their Q3 earnings just dropped, and wow, it wasn't just a beat. This report pretty much reset the entire narrative. It's a huge signal that this company is absolutely firing on all cylinders. Okay, let's get right into it. The number that had everyone on the street talking? $1.11 for GAAP diluted EPS. Now, let's be super clear here. Analysts were expecting 62 cents. This is a 79% beat. I mean, that's not just beating, that's completely demolishing the estimate. A number like that screams one thing, and one thing only: flawless execution. So let's break this down. What exactly drove this huge market reaction? Because it wasn't just that one headline number. The whole story is right there across the entire report. And this is what's so wild. The outperformance was just everywhere. I mean, forget the EPS for a second. Look at the revenue. $986.8 million. That crushed estimates by almost 19%. Then you've got EBITDA, up nearly 37% from last year, which shows just how profitable they are. And the real kicker? The project backlog grew to a record $2.95 billion. That tells you the future is looking really, really strong. So yeah, this isn't just a story about earnings. It's top-line growth and incredible efficiency all rolled into one. And boy, did the market react. The stock just took off, jumping almost 7.5% on the day of the earnings call alone. But look at the one-month picture. ECG is up 22%. That absolutely smokes the S&P 500 and the industrial sector. The market saw these numbers and, they voted with their wallets. Big time. So, the big question is, how did they do it? How do you pull off a quarter this good? Well, it wasn't just one thing. Let's peel back the layers and look inside their two main business segments. That's where you really see how this whole thing came together. And here's the key. They've basically got this two-engine growth machine. You've got the electrical and mechanical side, which is just on fire. Revenue there jumped almost 43%. Why? Because of the insane demand for data centers to power all the AI and cloud computing stuff. But then you have the other engine, their transmission and distribution business. It wasn't about crazy growth there. It was about masterful execution. They expanded their profit margins by a massive 180 basis points. So you get this perfect 1-2 punch, explosive growth on one side and super disciplined profitability on the other. And if you listen to what management said on the call, they basically confirmed this isn't just some lucky quarter. This is a real long-term trend, what we call a secular tailwind that's pushing them forward. The CEO, Jeff Seed, he put it perfectly. He said the demand for data centers is strong and shows no signs of weakening. So they've got this massive runway for growth. It's a classic case of being in the right place at the right time. Okay, so a great quarter is, well, it's great. But we all know what matters in the market is the future, right? Investors are always asking, what's next? So let's look at their guidance, because what management said about the rest of the year is maybe even more important. And look at this. They didn't just tweak their guidance. They didn't just nudge it up a little bit. They launched it into orbit. They raised their revenue forecast by more than $250 million, and their EBITDA forecast by a crazy $47.5 million. When a company does that, it's a huge signal. They're telling you, hey, that blowout quarter, that's the new normal. So if you boil that whole earnings call down, there are really four main takeaways. Number one, their execution is just top-notch right now. Two, they're riding this massive data center wave that isn't stopping anytime soon. 3, their balance sheet is rock solid, which means they have cash to make some acquisitions. And 4, that huge backlog gives us a really clear picture of what their business will look like well into 2026. All right, so we've looked at the quarter, we've looked at the guidance. Let's put it all together. What's our actual thesis on Everus moving forward? And what's the next call here? For us, the path forward looks pretty clear, and it comes down to 3 things. Step 1, just execute. They've got this massive $2.95 billion backlog. They just need to turn it into cash. Step 2, keep winning in the data center space. That market is booming, and they need to keep capitalizing on it. And step 3, put that strong balance sheet to work. Use their low debt to make some smart acquisitions and grow even faster. So when you add it all up, the massive earnings beat, the huge guidance raise, the rock-solid balance sheet, and those powerful data center tailwinds, well, for us, it's a no-brainer. We're giving this an outperform rating. Okay, so let's bring this home. We've got our analysis, we've got our rating, but how does that translate into an actual idea? How should you think about this from an investing standpoint? And this is the question on everyone's mind, right? The stock has already run up, so did we miss the boat? Or is there still room for this thing to run? What's the trade here? So here's the idea. We think you go long. Our core belief is that the market still doesn't fully get how long this data center boom is going to last, or just how good ECG is at turning that demand into profit. We see a clear path to $120 a share over the next 12 months. And the things to watch for? Keep an eye on that backlog number every quarter. And look for any news about them making small, strategic acquisitions to grow their business. So there you have it. That's our take on Everus Construction Group and their absolutely incredible quarter. It's a bullish story for sure. But, and this is important, please remember this is just our analysis. It's for informational purposes only. This is not financial advice.